Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders. Hello, YouTube. This is Frank coming to you with the market recap. It is Tuesday. It is May 21st. By today's standards, a fairly uneventful day in the market. Saw a few things moving. Coal's big loser on the day after missing earnings in fairly dramatic fashion, down big. But we really find ourselves kind of still in that same trading range that we found ourselves here yesterday, just a little bit more bullish activity today than what we were seeing yesterday. So we're still kind of in indecision mode. A little bit of reprieve for companies doing business with Huawei. I think it was 90 days reprieve where they can continue to do business. That was the quote unquote reason today that things rallied in the market. Whether that's true or not, I guess it doesn't matter, right? So on the earnings front tonight, we have Nordstrom's, who it looked like it was a pretty rough miss. They were down about 8% after hours when I peeked in on them. You also have Urban Outfitters. I didn't get a chance to see what their report was looking like. And then tomorrow before the open, Advanced Auto Parts, Analog Devices, Lowe's, Target, VF, so a few S&P companies, most of them over in that discretionary space, reporting before tomorrow's bell. And good afternoon, Amy, and good afternoon to you, Jasari. Great to see you guys. Hope everybody had a great day, both in and out of the market. We saw a little bit of movement, but really, as we look at the S&P, a lot of it kind of came on that opening gap to the upside. We kind of gapped open, had a little bit of a run the first hour and a half of the trading day, but really just spent most of the rest of the day just kind of hanging around, not really doing too much one way or the other. And when we look at this daily chart, and good afternoon to you, Patricia, great to see you. I hope you're doing well. We're in the same range that we were in yesterday, right? We've got some support down here at 28 on the S&P. We've got some resistance at around 28.90. At least that's where I have resistance, still below, the 50 and of course the 20-day moving average. So we're still kind of in this middle area where it's very difficult to get clear signals, in my mind at least, one way or the other. And I think most of the price action in today's market kind of reflected that. Nobody was really doing much one way or the other. We're just waiting for somebody else to get us out of this range. So if we look at this on an hourly time frame, kind of interesting. I don't know how useful it is, and we're kind of thinking ahead. We've seen this pattern a lot, right, in various forms, where we were in a nice upward trend, we break into a downward trend, then we start to develop that same resistance zone, and we try, and of course, develop a support level too, where this resistance zone can become very important, right? At least in my opinion, it can. So we're, right now we've kind of set up a higher low via yesterday's low. If we're able to work into that resistance zone and push through it, all of a sudden that's going to have some pretty interesting signals potentially on some of these shorter time frames, in addition to breaking through, of course, the daily resistance, recapturing those moving averages. So still, for the most part, I think it's more preparation for us than a ton of directional trading. At least that's how I'm looking at it as we continue to dance around in this little trading zone. And good afternoon to you, Ella. Great to see you again. I met with Ella not too terribly long ago, probably a week or two, but great to see you again, Ella. I hope you are doing well. Over in the Dow, we have a little more room before we get to that resistance zone, right? Here's that kind of what we looked at on the hourly chart potentially, right? We do have the 50, all of this old resistance looming above us. We did see the Dow Jones actually recapture its 9 exponential moving average today. That is our first close above that 9 EMA since we thought that this was a pullback, just good old-fashioned typical pullback, right? So a little bit of positive momentum. I don't think it's enough to get too crazy just yet, but that is, it's more positive than not, right? It is at least something in the Dow. Now we're still much like the S&P, still kind of in that middle of that range between support and resistance. And that's always the toughest area. Now you could maybe argue that if we take out these highs from last week, that would be a little bit more of a buy signal. And I think I could get on board with that. My biggest objection would be we're rewarded with the falling 20, that resistance, that 50-day moving average sitting right on top of us. So that is a little intraday resistance we can keep an eye on. But I think for me, at least, it's this major level up here where we've tested time and time again, seen particularly interesting price movement on both sides, bearish and bullish, at this zone around 26.2. So that will continue to be where I'm looking on the Dow. Did have a little bit of a bounce back day in tech here today, closed the day up about 1%, but really, once again, kind of finds ourselves in the middle of no man's land, right? We've got support, we've got resistance, and we really are right about in the middle. And the problem with being in the middle is if you're trying to make the bearish case, you have to give it room, all this room, right, which is going to hurt the risk to reward. Same argument, though, for the bullish side. We could argue using this support from last week, although I think we should use this area closer to 72 approximately personally. But either case, we have to give it a lot of room, whether we're on the bearish or the bullish side. So yeah, I don't like the middle very much. And for someone who doesn't like the middle, this is not my favorite place to be, as you can imagine, but this is where we are, whether I like it or not. Over in the rut, we did see some nice movement here to the upside, that support zone holding, at least for now. We've got lots of little things, lots of challenges ahead on the rut, falling nines, all of these moving averages, the swing high, this old resistance zone. Still think that we're looking at this overall on the neutral side of things. If we do take out this support zone, probably can expect to see a little bit more selling. At least that's how I'll be looking at it, going down into the 1500. As long as this support holds, I don't really think there's much to talk about on the rut. I do overall believe it continues to be sideways between approximately 15 and 16. But if we do take out this support zone, that could be a little bit of a short-term selling opportunity. We'll have to see if that is able to hold up or if we ultimately give out. So again, we look at these indexes and it's all in the same spot. Yesterday was more bearish sentiment, today's more bullish sentiment, but really we've gone nowhere. Continues to be a credit trading environment, in my opinion, for the most part. Again, if there's a nice clean technical setup on an individual stock, I'm certainly not opposed to that, but broadly speaking, continue to like this market for credit spreads. As we move into the material sector, we did see a nice little bounce off of yesterday's low. And I think what that did for me more than anything is it made me feel comfortable. We've talked a lot about 54-ish, right? It's a zone, it's not been a number. It's made me feel a little bit more comfortable about kind of identifying the low from yesterday. We tested it last week on a couple of different occasions, right about 53.80 as my new support zone. We did breach it on the intraday on one occasion, but we did not close. So I'm going to be looking at support in the materials sector at this 53.80 mark, with resistance up here about 55.20. So again, kind of in the middle here. Could be interesting either way. We looked at some of these companies yesterday, and I think it still looks a little more bearish than bullish. But if we break to the upside, if we take out that 55.18, that could very well change the way some of those charts that were looking a little weaker change, maybe put them a little more at least into some neutrality. So not a whole lot new to report, I don't think, in the materials sector overall. I still think my favorite setup, at least potential setup, in this space is our old friends at Air Products that did a little bit of a doji here today in those moving averages. Like this as a breakout candidate personally. Just have to wait it out a little bit longer. Good afternoon, Ed. Great to see you, buddy. I hope you are doing well. Hope the market is treating you kind. Energy, interesting day here today, working very close to that old support / resistance zone that we've been keeping an eye on, just around $65. We're able to close back above that 9, which is ever so slightly trying to turn from being neutral to start and move to the upside. Got to get above this, got to get above the 20-day moving average. If we see that, I think we have to at least give it at least a little bit of a bullish nod. Now, this resistance should be a level that's tough to break. We've got a lot of history here. We do have that 20-day moving average to boot right on top of us, so it shouldn't be an easy fight. But if we do break that, I think we can say, well, now we've created higher lows. We've created higher highs, of course, hasn't happened yet, but if we do break, that's what we would be getting. We've recaptured the 9. Of course, we closed back above the 20, back into this old trading range. So an interesting place to watch. On the support side of things, really nothing has changed down here at 63. Could really break either way. And probably odds are we're talking tomorrow, we're somewhere in the middle, right? But we got to be ready one way or the other, because sooner or later, whether it's breaking up or breaking down, we will come out of this range. You saw, I believe it was Chevron, one of the first stocks really trying to break out here today. I guess super aggressively, you could probably argue that we did. We, of course, depends on your rules, right? But very, very close. You still have more than not that have not broken out of resistance, like an ExxonMobil that still, kind of has that trading range. But a little bit of oomph behind the energy sector here today. We're in for an interesting fight, I believe, at this zone. We just have a lot of history at around $65. We have to deal with these moving averages to boot. So if we can get above that, might be something there that we can take a closer look at. Pretty good day over in the financials, as those insurance companies in particular continue to do well. We've looked a lot of them, but even the banks, have had a pretty decent start to the week. Most of the companies within the financial sector have had a decent enough little start to the week. We were able to kind of recapture that 9 exponential moving average over here too. We've got a little bit of intraday support and resistance from the very recent past. Not a lot of testing points, but we did use this low and the same place as a high right around 27 and a quarter. If we can push through that, just would be a good sign. I, of course, like this sector quite a bit from the bullish point of view. As you guys know, one of my favorite areas right now from the bullish side of things. That would just be nice to see. We're kind of working. We do want to keep an eye when we work back into that 2750. We do, of course, have some history there, but we have plenty of things that are knocking on the door or have already broken out. You've got Chubb Limited, well, maybe you do, that pushed through resistance today. You have AJ Green. I always call him AJ Green for the football player, but Arthur Gallagher, that Noah actually did a little bit over on our Instagram, kind of going over them, still knocking on the door of the breakout. Of course, you've got Aflac that's really had an overall pretty nice run, a little bit of a doji day, but I still see relative strength personally in the financial sector. We are kind of on some of these strong performers starting to pull away a little bit from some of the breakout points. We do have some resistance ahead of us on some of the banks and things like that. Let's go to Bank of America here. We do have a little bit of resistance not too far away from us. Haven't recaptured, especially on the banks, we haven't recaptured trend, and certainly not the moving averages at least, but we are at least, I believe, seeing relative strength. Little bit of a bounce back day, back above that 75 here today in the industrial sector. Had a little bit of a rally on some of the big names, although Boeing's in a really interesting place, kind of right, doji right at that, right in the middle of the 9 and the 20 at the flat 200-day moving average after breaking that support. Really interesting looking chart, I think, on Boeing. You had CAT also finally, for first time in a little while, catch a little bit of upward movement. Still a pretty rocky looking chart, I think, on CAT, but at least some movement in the sector. And this is going to be one on my watch list for the next few days for potential bearish retracement. So I had to bring out my CAT hat just because it's been a while since we've had a good CAT setup. So the retracement, we still got some work to do to get it, but maybe we will. Right? Doesn't hurt to ask. We've got a lot of little things. Our real level of resistance is going to be, as you guys know, at $77. 76 should be a resistance zone as well. If we can clear that 76, probably not a hard sell to get to 77, but that should be a little bit of a battle with some of the relative weakness overall that we've seen within this space. Continues to be an area I'm very cautious with. I think we are overall kind of a sideways pinch, broadly speaking, in the sector between 73 and 77. So overall, still looking at this a little more on the neutral side of things. The 73 is the big one for support for me. If that gives out, this could be, probably will be my favorite bearish area. I can't imagine, who knows what things will look like by then, but I can't imagine, based off the way things look today, that this would not be one of my favorite bearish areas if, and of course only if, we break this support zone. We've got a ways to go. Again, we did close above the 9, seeing very little bit of subtle movement to the upside. I would put a little more weight into some of these closes above these 9 EMAs today if it wasn't for the overall volatility of the market that, we've dealt with both trading days so far this week, right? It's just not going to go away. So we do have to, of course, keep that in mind. So 76, kind of that next level of resistance. Now we can take a look at this low from yesterday around 74.20 as a little bit of intraday support, but the big numbers really haven't changed at 77 for resistance and 73 for support. Over in the industrials, little bit of a bounce back day as we saw on the NASDAQ, on tech, but in a really weird spot. At this point, if you're looking at things from a buying perspective, and when I say you, I really kind of mean me, if we are able to continue this upward momentum, working into those highs at around 76.30, if we see a little more movement to the upside pushing through that, we'll create those higher lows, and again, that higher high, probably the bullish signal that I'll be looking for from an overall sector perspective. On the other side of things, much like the NASDAQ, I think we can look at this low, this low from last Monday as our first level of support, but we do have a heck of a lot of history at $72, which will be kind of the major support that I'm looking at. But unlike the NASDAQ, I think if we take out this low here, that would be a little concerning. We will, of course, created lower highs and lower lows in doing that. And while it's not a lot of room, there is some room between this support zone and that $72 longer term support level. So we'll have to keep an eye, much like the broad market. We're kind of in the middle right now, not a lot of clear signals when you're stuck in the middle, especially with volatility. We did see a little bit of a pullback here, kind of carrying on. We just kind of seen this slow, lower high type of thing on the staple sector, getting a little bit of a pullback. I think that is a good thing. Some of these things within this sector haven't pulled back for like ever, it seems. Like a Tyson Food after breaking out. I mean, it's basically lived above that 9 EMA on just a monster tear. So a little bit of a pullback would present some really interesting potential opportunities for us. So I wasn't unhappy to see this break down a little bit. You've got Coke, I think we looked at Coke yesterday, but they're still kind of drifting back in towards their bullish zone between that 9 and that 20. You've got Pepsi that's kind of testing the breakout point, pretty darn close to it. So still holding the breakout. And that's always a positive thing from a bullish point of view. Developed a little bit of a top too for a potential next swing to the upside. If we break to the upside, taking out these highs would be, in my opinion, a signal for us. If we maybe see a little bit of a doji tomorrow, followed by some upward movement on Thursday, maybe an opportunity to get into the breakout just on the pullback. So I'm pretty excited about the pullback, at least potential. I'm not going to get too crazy. It's certainly not anything too terribly dramatic, at least as of right now. But I am pretty excited about some potential bullish retracements over in the staples sector. Utilities tried, and boy, they tried to break out of that $59. They failed at the end of the day, but we really were zooming up. We took out that 59 and people really started buying. Then we took out that high point where we broke yesterday on the intraday and had a really nice pop for about an hour. But a close is a close is a close, right? And profit taking did commence at that point in time, putting us once again knocking on the door of that 59 resistance level, but not able to push ourselves through for at least one more day. It sure seems like it wants to, but what it wants and what's going to happen, we'll have to wait and see. They're not always the same thing, right? So we'll continue to watch this. Still continues to be a very interesting breakout sector, in my opinion. We just haven't been able to get that nice, clean close over on the sector ETF, at least yet. It is certainly trying. It's not due to a lack of effort, that's for sure. Good day over in healthcare, and a part of it is, we looked at UNH, and again, this is always one of my favorite probably my favorite reversal pattern. I know a lot of people like the double bottom W's, but I actually prefer when you create the higher low and then a very clear ceiling and then ultimately break through that. So, UNH here was able to carry on that momentum from yesterday's break. You've seen some other things like Anthem kind of get involved as well, breaking above resistance. Not quite as pretty of a chart, in my opinion, as UNH, but very similar, breaking out to the upside, closing up. Hey, what's up, Cody? Good to see you, buddy. Welcome out to the market recap. Hope you are doing well. Hope it was a good day. I know you got your opportunity to sell some puts on Planet Fitness, so I know that makes you happy. So we're seeing a little bit of a turn, in my opinion. We've talked about this slowly within this space. Just a few more signals to the upside. Now, overall, it's still kind of a messy area, right? And I think it probably warrants just a quick sneak peek into some of the names. We looked at UNH, we've looked at that Pfizer kind of still in this 50, 200-day moving average pinch zone, trying to break, it looks like. You have Merck knocking on the door. This one could be one that we could, or not AbbVie, Merck, hit the right button there. A break above this resistance, again, much like the UNH pattern that we looked at, if we take out this resistance zone, we will have created higher lows and, of course, higher highs via breaking that. In this case, we'd also capture that 50-day moving average as well. So seeing some interesting things. You still have things like AbbVie here that I'm still just keeping in the bearish watch list. If it ever gives out that support, I'll be there. I don't know if it ever will, but I will be there, and it'll be in the scouting report meeting every day, every week until then. But we're seeing a little more, at least mixed action. You still see things like Amgen that are, after breaking this support zone, have given us plenty of opportunities, if we're interested in them, into playing into the breakout. So things aren't 100% bullish or bearish, in my opinion, in this sector. They're never 100%. That was a little bit of over exaggeration. But I think as we look at the individual components within this space, I think it really puts us into a place where, hey, we can be open to both bullish and bearish trading opportunities in the healthcare sector, at least in my mind. On the ETF, still messy. Still really, really messy on the ETF. Probably not the way I would be looking to try to play into the healthcare sector. It really has been pretty consistent for a couple of months now. This area that we tried and failed, at least as of right now, to break continues to be the area. We've got all of that old resistance or old support, new resistance, failed breakout point now. And of course, probably as important in this case, those moving averages. So still got lots of stuff on the daily, $90 for a 50-day moving average. Really don't have a lot, of nice clean signals until we break way up here at the top on the ETF at about $91. I personally don't think so. Not a particularly friendly chart to be trading right now, but I think it's really turning into an interesting sector. I like the healthcare sector, as you guys know. Those of you who have been with me since day one in the market recap, you know that is one of my favorite areas to follow. So I'm always excited when I'm not quite as confused on it. So over in discretionary, much like the NASDAQ, much like tech, we kind of find ourselves in that middle zone, right? We've got support down here. We've got resistance, up here, although I would argue that we just work to 118, get above that breakout point before we get our signals. We all know the story here. Lots of earnings, plenty of earnings coming out in this space tomorrow before the open. Don't think that this is, I think we want to see these earnings, how it impacts that, but really probably going to get that opportunity anyway, because we're kind of stuck, much like the overall market, in the middle, right? Stuck below right now, below the 50. We've got swing resistance. We've got the old breakout point. We have swing support at about 113.50. We've got a lot of history at 112. We've got some of the retail companies not necessarily lighting the world on fire with their earnings. So it's an area I think that we can like, but we do have to be careful on with everything that's going on in this space. I mean, we saw Kohl's here today. I'm sure you guys all saw Kohl's, but just in case you didn't, I mean, a huge gap down, terrible miss on earnings, breaking kind of the last level of support that they have for a little while. I think we do have to be careful. A good round of earnings tomorrow can maybe clear that up a little bit, but we're going to have to see how that is, that because it could just easily be bad, which could really hurt. So one of our areas where we do have earnings. Over in real estate, a little bit of upward movement off of those moving averages here today. We all know the score here. We've got our major resistance level sitting right on top of us, much like the utility sector, potentially breakout candidates that could arise, I think as early as tomorrow, just from how far would we have to go up to break out of that. We should expect that resistance to be a bit of a challenge. The only thing we know for sure on real estate, our XLRE here, is that when it gets up to, just shy of 37, the buyers take a big step back, right? That's why it's a good signal if they buy it once it gets past that. But we were able to carry on a little momentum off of those moving averages. Looks like folks were certainly interested in catching some of the deals or discounts off of the steep sell-off that we saw here yesterday. Really, support for me has not changed. It's going to be down here at 34.75. Everything else is kind of in the middle. Yesterday's low, we could argue, was a little bit of short-term support. This low from last week certainly could argue at some short-term support, but the major support zone is unchanged for me, at least over in the real estate sector. And lastly, over in communication services, lo and behold, we're kind of in no man's land, right? Same as so many areas within the market. Got a support zone. We know where buyers stepped back in and said, this is too cheap, let's do it. We've got a resistance established via selling off of those highs from last week, and we're just kind of in the middle. This is kind of an interesting looking chart, kind of sitting right on the 50, right below the 9 EMA. Of course, always the thing to do in my mind when we're evaluating this sector, because of how important Facebook and Google are to them, take a closer look at them. Facebook's an interesting looking chart. I know you guys talked about it in the halftime report today, Cody. I think we need to get back above these moving averages, this swing high, much like the ETF, to be getting some signals, but could be an interesting development if we're able to get those things. On the other side of things, you've got Google, who's not nearly as easy of a sell. We've held up a little bit here today, but lower highs, lower lows, big gap down on earnings. For me, at least, it's a much harder sell from a putting together a potential bullish trade on Google as opposed to Facebook. Saw a little bit of a bounce back in some of the video game companies. I still don't trust them. I certainly don't trust EA. I don't trade EA because I can't be trusted to be not biased in my evaluation at all times. When it comes to EA, as you guys know, I always assume go short on EA because I get mad at their video games way too often for a person my age, but probably isn't going to change. So over in this space, again, just like usual, I'm going to be looking at the individual components, potentially their industry groups, because we looked at some of these things yesterday. We saw, AT&T, and Verizon, potentially trying to break out. I mean, Verizon tried to break out yesterday. It wasn't meant to be yesterday, but nice little bounce back day here today. Got AT&T, very similar, knocking on the door of a potential breakout. Got Disney, and that's not my style, but I know some traders who are interested in potentially bullish plays if we can take out these highs from the last couple of weeks. Certainly a lot of overall momentum, just kind of sideways action the last little bit. So we're still seeing some really interesting things out here within this space. I think the right way to approach the communication services sector, because again, you guys know this, but so many of those things don't belong together in my head. And so I'll kind of look at it. Video games go here, AT&T and Verizon, go over there, Charter goes over there. And that's generally the way that I will take a look at that, as you guys all probably know. So for the most part, not a lot has dramatically changed versus yesterday. We really find ourselves kind of in the middle between, pretty, identifiable levels of support and resistance in the market, and we're just going to have to let it battle out, right? Opportunities will present themselves both from a bullish and a bearish point of view on individual components, but broadly speaking, we are in the middle, as they say. Interesting potential pullback opportunity developing over in the staple sector, though. That is definitely interesting. I would like to see a little more selling into a small doji over the next day or two, followed by some upward movement. We can ask, right? Can't assume that we'll get it, but we can certainly ask. As we move over to the VIX, a little bit more drip to the downside here today for whatever that's worth. In my opinion, this trade war stuff is not going away. So, the market is volatile until it's not any longer. And that is how I will be looking at it. Knocking right into $98 over on the dollar index, of course, on that weekly chart. We saw this yesterday. We're trying to get through those bodies when we first broke out. Really think that's going to be a nice signal. Still like the dollar. It's just how do you want to get into it? I want to cleanly break that, as you guys know, before I get too excited, because I'm not much of a intraday player in the Forex market. Support, I think at the very least, we've got it down here at $97. That's our swing low. That's our 50-day moving average. Still solid strength over on the dollar, but we haven't broke resistance yet. So that's exactly what my thoughts are too, Cody. When we finally get that confirmation on the break, and I know some traders are already say it's there, and I get that. I believe, much like you, that it's a pretty easy run into the $100 mark. Not necessarily overnight, but I do expect very similar things if we can cleanly get through this resistance zone. I've really been looking at the body of those weekly candles when we first broke, but of course, I will keep an eye on the high points because you have to, right? You have to do that. Yeah, I'm biased. I'm not. I'm waiting for that clean breakout signal. I think at this point in time, most people probably are biased to the dollar, at least technically. I mean, forget everything, all the good fundamental reasons, or at least not as bad fundamental reasons to like the dollar. Technically, it has really been clean as of late. Fighting at this resistance point is about as bad as it's gotten for the dollar for a little bit now. So still watching for that final push through that resistance. But I do agree with Cody, a break, when we finally cleanly break, I do expect it to not be all that difficult to work into the $100 mark. On the other side of things, we had gold test support here today. Now, we did come off of that support, putting together a pretty nice little hammer candlestick. This was pretty darn red at some point today, right? We did come off of those lows. This is kind of that last real level of support from a price perspective for a little while, right? I'm going to just steal you because you guys know no one should ever trust me to draw lines live. Next price point, if that support gives out, we do have to think about potentially the 200 period moving average. I don't think it's wise to ignore that. Whoops. But on the price-wide side of things, this support gives out, we really don't have a lot till we get into 1260, 1255, depending on how much weight we're putting on that 200 period moving average. A break below this support would be the first, at least in my opinion, decent swing trading signal that we've seen for a little while here on gold. Ideally, if it is going to break, we spend a couple of days dancing on the floor and then break down, late week or early next week, right? But when we're this close, it could happen as soon as tomorrow. And on the other side of things, it could very well hold. It's held, and it was a lot scarier back here in my mind, having just recently broken through 13. We've held on multiple occasions. I think we do have to respect this. You'd have to be a lot braver than me to want to go bullish on this chart. So certainly not interested in that, but we are at a support zone, and I know not everybody's me. Some people just like to buy at support, and well, when you're at support, that's not the worst place to buy. That's for sure. Still have lots of overhead. The moving averages, I'll watch this falling 9 to ultimately become the first level of resistance. But right now, price-wise, it's going to put us up here at these old highs for me at approximately 1290, and we can probably use today. Yeah, it'd be a brave bull, but hey, there are gold bugs out. Somebody stepped in and bought it this morning off of that price. I promise I wasn't that somebody. So on the support side of things, about 1267 below these lows here today. So yeah, exactly. Yeah, I'm going to pass on both until it simmers down and gives me some nice clean signals. When gold is well behaved like it was last fall and early this year, it seems like it's such an easy thing to trade. When it's misbehaving, it's just something I have zero interest in. Quite honestly, all the time I spent thinking on gold for several weeks now has been right here in the market recap. As soon as we're done talking about it, I'm not even thinking about it again until tomorrow with the way its chart looks. So Over on silver, much more interesting movement from a potential, as of late, certainly been an easier place to go bearish, in my opinion, than gold. Recently broke down. We're starting to put together a little bit of a floor, right? So we can either get a retracement, which would be perfectly fine, but we're starting to put together a little bit of a floor. We're only a few days into it, but if this floor gives out, that would argue, I would argue that that's another short-term sell signal. I think a little bit of a retracement might be preferable, working back into 1475, or at least into that falling 9 and getting some sell signals. But this could be another area. For the first time in a little while, the metals are actually interesting to me. I really like a potential retracement in silver. We'll have to see. I like when things build floors. Now we've got 3 days at about that same low. If that gives out, should at least give us some short-term bearish signals. So it's either retracement or breakdown, hanging around a little. If it wants to break, I'd like a few more candlesticks. If it wants to retrace, that's fine too. I would not complain. Now, of course, the most impractical, yet I find it the most interesting thing going on in the market today is natural gas. After pushing above that 50 and briefly above that 9 EMA weekly, we find ourselves right back down where we started or where we ended last week. This is the battle that I think traders should be really interested in, this battle at this 9. We've talked about this on multiple occasions, but for me, this is the opportunity. If we want to play the bearish retracement, it wasn't a couple of weeks ago, it's the way we're developing right here. We actually have room until we get to that support zone at approximately 250. On the other side of things, there's still a lot of week left, right? Yesterday, we were above those moving averages. Today, we're below them. There's a lot of week for this to finish one way or the other at this point. I think it's a very interesting battle that we are seeing. If I'm looking at it from a bearish retracement perspective, I do at the very least need to see a little bit more downward movement. I think you could argue this little trend that we've put together could be an entry point, or at least a place to look. A little more conservatively, get back below that 20-day moving average. On the other side, if I'm a buyer, I'm just hanging out, letting that battle develop. If I can win that fight, that is an interesting signal from a bullish point of view. We talked yesterday. It's a battle. That's a tough one to win. It is very difficult to break through the 9 EMA. We saw on natural gas. It's just we've been below it for a long time on that weekly chart. We've pushed our nose above it, but since we broke it, we've not reclaimed it for months and months and months now. And so if we can reclaim that, I do think that's an interesting signal, especially knowing that we're coming off of that longer term support zone. On the flip side, though, there's room for the bears if we see more downward movement. Even if you are concerned about that support zone, which I certainly would be, there's room before we get there. There's room for a potential trading opportunity before we even get there if we really, really want it. So just another fun day over in the world of natural gas. Over in crude, just continues to do this dance. Hasn't really established a direction. If we go into this on an hourly chart, though, I think we can kind of start to see where our movement might occur. If we can take out this high at 63.80, should be, in my mind, a fairly good signal for the short-term traders, which would be helpful for the longer-term traders in this pullback. Don't really have much beyond that until we approach that $65 mark. Somebody looking at these highs that we put in these last couple of days as intraday resistance, a break of that, I would expect us to work towards that 65, taking it one step at a time. As long as we're holding 60, I still hold a bullish bias personally on crude oil. On the other side, though, if I don't feel that way, we're developing a pretty clear level, had a little bit of a high base breakout at around 62.50. We've tested that on multiple occasions. That should, unless we free fall tomorrow, that should allow that 200 hourly to work up and be lining up there as well from a support, early short-term support perspective. On the bigger picture, again, you're either, believer that this was a pullback, and whether you're in or still looking for ways to get in, I would imagine a big part of it was approximately $60 where we've seen some upward movement, or you're just a little on the neutral side of things, waiting for something to shake out. But if we look at this on a weekly time frame, it looks like just a continuation of a bullish retracement, right? Pull back, doji, some upward movement. As of this very second, again, a lot of week left, but as of right now, we have put in a higher low. I think we technically put in a higher high, but it was by such a tiny amount, I don't think I would count it. So that is where we find ourselves after, for the most part, certainly by today's standards, not a whole lot happening. You did see some interesting earning movement. I really thought AutoZone had some really nice movement after its earnings. Once it kind of pushed into that, let me throw a line on here so we can do that. Once it pushed through that 50-day moving average, which is of course lined up there with that 20-day moving average on the intraday, it really had a good run, and they had a pretty good report. And of course, traders really were very happy with that report. A lot of momentum early. Once we took out those longer term averages, we really continued to move. It might be difficult to trade tomorrow, but certainly something I believe should go on the watch list. You had things like Tractor Supply that, from the option stock, I can't remember, probably options report. They hit the entry point, at least by my rules and standards, they did. So there are still some nice things out there for us to trade. We want to continue to respect the narrative of the market. We've seen 2 gaps in 2 days. We've seen more gaps than not over the last 2 weeks. So we should assume that volatility is going to continue to be here until it's not. But there are still good opportunities on both sides of the aisle for us as we move forward. So just keep in mind, volatility is not gone yet. Whether you want it to or not, still get some decent credits though. Always a nice thing. So, ladies and gentlemen, that is going to do the market recap for today. But as always, thank you so much for your time. Always appreciate it. It's a lot more fun to do this with you guys than on my own. So thank you for joining me. Of course, if you are new around here, be sure to subscribe to the channel and hit that notification bell. And also join us over on Twitter. You can find Cody on Twitter. You can find me on Twitter, Matt, Ilka, Emily. We've got lots of us over there at Tackle Trading. You can find me at Frank Martin 23 as well. For our pro members tonight, we've got the Coaches Show going on. Going to be talking shorting stock, so that should be a lot of fun. Enjoy that once that gets kicking off. If you're not a pro member, we certainly invite you to join us. We've got a 15-day free trial. You are welcome to come see what we're all about over at Tackle Trading. So just let us know. Of course, feel free to join us over in our clubhouse as well. Another place where we can just talk trading with other traders. So with that said, ladies and gentlemen, my pleasure as always. Thank you so much for your time. You guys enjoy the Coaches Show this afternoon or evening, depending on where you live. We will pick it up same time, same channel here tomorrow afternoon. So get out of here, everybody. Enjoy your Tuesday. See you tomorrow.